If you're looking for a simple 5-step SMC swing trading strategy, then this is a video for you because in this video, I am sharing a trade that I took on the S&P 500. I'll walk you through the 5 simple steps that got me the result and how you can essentially copy these 5 steps and implement this strategy for yourself. So if you're new here, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011. As always, all of this is my opinion only and not financial advice. All right, guys, so starting out here with the S&P 500, before we get into the actual strategy, I want to show you the trade that I called in Discord in real time, not to flex, but just to show you that I'm in the trenches every day doing this stuff. This is not somebody on YouTube making videos. In hindsight, this is stuff that I actually do. So here is the trade. I announced this in real time in our Discord group, and you can see here that this is the trade. Shared a couple of charts here with my entry, stop loss, and target. So this is the trade that we are covering today. Now, if you want to gain access to Discord and the free SMC course that I put out, check out the link here on this screen. So somewhere here on the screen, there will be a link to that free course. And beyond that course, you can join us in Discord if you want. If not, then that's okay too. Looking at the S&P 500 here on the 1-hour time frame. So the very first step when you are swing trading with SMC is, first of all, you have to identify the context of the market, okay? So directional bias, the context, what are we dealing with? Is it a range-bound market, downtrend, or uptrend? So that's the very first step. Now, on the 4-hour time frame here, what you'll notice is that for the most part, yes, we do have an uptrend. However, also for the most part, this market has been pretty sideways, okay? So yes, we have higher highs and higher lows, but notice how all of this through here, right, has been pretty much range bound. So that is my very first observation. Now, my second observation here is that looking at this move lower, you can see where we had a lot of displacement back here. Okay, so these two candles right here on the 1-hour time frame, you can see how we had a ton of displacement here. This is my signal. This is my cue that big sellers are in this market and pushing this lower. Okay, this right here, whenever you see a move like this is not retail action. This is institutions pushing the market around. So that's my very first observation. We can also see that we took out some important lows back here on the way up. And furthermore, too, we had a lower high develop, and then we took out this low back here. So structurally speaking, we are mostly range bound. Yes, slightly in an uptrend, but mostly range bound. We also have the market taking out some of these lows. So right away, guys, when I see this here, I'm looking for shorts. Now, in order for me to short a market, though, I have to see a move higher, because even if we just take from this high up here down here to the low, this is a modified Fibonacci tool. I will put the settings up here real quick. You can pause the video, copy these settings. This is how I identify premium, discount, and optimal trade entry. So the way this works is this 50% line is essentially the midline here between discount and premium. So if I'm looking to short a market, we have to be up here in this light green area, okay? So I know I cannot short down here. However, ideally, I'm looking for OTE. Now, it doesn't have to be in OTE. I want to be very clear there that really it comes down to imbalances in the market. If OTE lines up with imbalances, then that's great. But if it doesn't, then imbalances for me in the market are going to supersede anything with OTE. Okay, so bottom line here, guys, I need to see the market up here in this area before I look for shorts. So right away, what I'm looking for here is an imbalance on the buy side. Okay, so let's write out our steps, right? 5 steps here, 5 very simple steps, where step 1 is going to be to identify, and we're just going to say context, okay? Not necessarily, directional bias is important, but context as well. Because when we're looking at a market, the context is what's going to tell you essentially the story of the market, what's been happening for the past few weeks and even months. So step 1 is going to be identify context. Now, step 2 is going to be to identify any imbalances, and we're going to call this area of interest, okay? So this is the area where I want to potentially do business, okay? So where I want to short this market. Because again, I know that we have, structurally speaking, the market mostly range bound. I also know that we have the market giving us some follow through here to the downside. So when I look at this here, okay, above this high, this very aggressive move lower, I know with something like the S&P 500, you tend to get a lot of erratic price action. And knowing that we have this area up here still open for business, okay, so between this low right here and this high. So if I zoom in here, even on the 4-hour time frame, you can see this as well, right? It's a very small area, but areas like this can often matter. So what you'll see here is that from this low right here and this high, we have this gap. Okay, so this gap right here is my imbalance that I'm looking to be mitigated before I look for shorts. So hopping back here to the 1-hour time frame, you can see that off of this high back here, it's actually up here toward this low. So it's a little bit larger here in this area. So again, we have this 1-hour low right here. We have the 1-hour high. You can see that we have this gap through here. This is our fair value gap. Now, a lot of people would say, well, okay, but we filled it back here, right? This was our fair value gap back here and we filled it. And yes, that is true. However, keep in mind that if I'm looking to short this market, again, I need to short high. So this isn't a matter of me saying that the market will come up here. I didn't know at the time whether the S&P 500 was going to come back here or not. It's simply a matter of we either get this up here, okay, or I'm not interested in shorting. It's as simple as that. I have a lot of other charts to watch. I trade all the major currency pairs, the S&P 500, gold, Bitcoin. I don't need to do something here. So if we get this right here, then I'm interested. If we don't, then I'm not going to trade it. Okay, so that is step 1 and 2 here for this S&P 500 trade. So let's play this forward now and see if we do get the S&P 500 coming up here in this area. So right there, we tap into this imbalance. Now, at this point, what I'm going to do is drop down to a lower time frame. Now, typically, if I'm using the 1 hour time frame for directional bias or context, then I'm dropping to a 5 minute to look for a lower time frame change of character. In this case, though, because it's the S&P 500 and because I'm looking for a short, I know stocks have been ripping higher for years. I'm looking for more conviction behind this. Okay, so I need to see the 15-minute time frame give me a change of character, not the 5 minute. So anytime you need a little bit more conviction, just go up one time frame, because when you go up one time frame, you're going to get more volume behind each candle, and that's going to give you a little bit more conviction. Furthermore, it's going to slow down your trading a little bit. Okay, so that's also key here when we're dealing with something as volatile as the S&P 500. So we're going to call this watch for CHoCH, and I'm going to put this on a 15-minute. Okay, so again, this is exactly what I was doing back here when I announced this in Discord. This was the trade that I took. You can see here that on, let's see, this time frame right here where we got that flip that I'm going to show you, this was the 15-minute time frame. Okay, so here on the 15-minute time frame, I'm looking for a change of character. Now you can see that we are into this imbalance back here, but this doesn't matter. This is not the setup. Okay, all I want to see is this mitigated. Even if we come higher than this, then that's okay. All I want to see is this mitigated first. That's step 1. Step 2 is I need to see, or step 3 in this case, actually, I need to see a change of character on the 15-minute time frame. Okay, so right now what you can see is that this structure right here is really tight. And what I mean by that is we had a lot of displacement up. Okay, and pay attention to this too, guys, because this right here is going to be key for what's to come. But right now we have a very tight trend. Okay, not a lot of structure here. So I need to see the market give me something more, something more obvious than this if I'm going to short it. So playing this forward again, still on the 15-minute time frame, you can see that we have this high right here. Now we get the pullback. So if I mark this off now, right, all I'm doing here is just marking out my highs and lows. So here we have this high. We come up here, we take this out. So now we can call this a 15-minute BOS. Okay, so we have a BOS here. It also means that this low now is my protected low on the 15-minute that I'm watching. If we were to close below here, then I'd be looking for shorts. Okay, so right here, we get the move higher. We come back down here into this imbalance, and you can see that we just kind of chop around here for a little bit, come back up toward the highs, and then right here, we do get a close above this high. So again, I'm just walking this forward. Okay, that's all I'm doing here. I'm not trading. I'm not doing anything just yet. I am just watching. Okay, and notice too, guys, the patience that's required here. Because really, I mean, from back here to the point that we entered this, I mean, this was noon on the previous day back here. And my entry didn't occur until the next morning. Okay, so this took some time to play out. But again, what happens is that traders, drop down to a 1 minute time frame or something. They're looking for a change of character 3 here, and they're just getting chopped up. And meanwhile, I'm just sitting on the sideline and waiting. It took half a day for this to set up, but sometimes that's the case. So what we can do here now too, knowing that this is our BOS, right? We find our protected low on the 15 minutes. So from here to here, what's the lowest point? It's this one right here. So very, very simple, right? We do the same thing every single time. So this low now is the one that I'm watching. Okay, so I'm going to move this over here knowing that our imbalance has now been mitigated. In fact, I'm going to take this off of here just to keep it nice and clean. Okay, so this is my protected low now. Any close below here, any acceptance below here is a potential entry, okay? Because I know that buyers are losing control, and right there you can see we got it, okay? So I'm going to back up one candle here because I want to show you that when we get this break below, okay, so let's walk this forward. We get the break below, a lot of conviction here. Okay, a lot of selling pressure here on this candle. So now this too is important because a lot of traders will then chase this lower and try to enter down here, right? And you can, there was nothing wrong with this. You would have been profitable either way. But the risk reward here on waiting a little bit to see if you get a move up here into this region, that is substantial, right? Entering up here with a stop loss above the highs versus entering down here. Okay, now what you'll notice here is that the very next candle, we did get a retest, okay? So this retest right here, I was entering right through here, and I'll show you that here in a moment. First though, let's go out here and talk about step number 4, because this is going to be significant before you even enter the market. So step number 4, when you are trading with SMC, we often talk about using imbalances as potential areas to enter the market. However, the reason that we often see markets rebalance areas like this, inefficiencies like this back here, okay, in other words, this candle back here, the reason we often see markets come back and retest this or mitigate it is because you had an inefficient auction back here. Okay, so in this case here, the selling pressure was so aggressive that you essentially didn't have buyers and sellers having an equal opportunity to enter the market. So in other words, we call that an inefficient auction. And markets will seek out efficiency, okay, in a case like this here to come back and retest this area and give the market a chance to facilitate both sides of the auction, okay? So that's why we often see this. Now, the point here that I'm making is that if we know that a market will often come back to areas like this and we look at areas like this for a potential entry, then why not also use this for targets, okay? Why not use things like fair value gaps for targets? And we absolutely can and should. Now, if you look at this here on the 15-minute time frame, what you'll notice is that all of this through here, this is a massive imbalance right here, okay, on this displacement. We also had down here in this area, all of this through here too is also an imbalance. So notice how we had a lot of displacement through here, okay, a lot of inefficiency through here with regard to the auction, okay? And knowing that markets often come back to areas like this, when we have a move up here, okay, and then we get a low time frame change of character, then we should be using areas like this as targets. And this is part of the equation, okay? It's part of our steps when we are swing trading SMC. So step number 4 is going to be an unmitigated imbalance as a target, okay? So in this case, again, we have these pockets right down here following this aggressive move up. Okay, so we have this through here. We have the change of character now taking place. And step number 4 is just to ensure that we have an area to target that makes sense. Okay, not just a logical high or low, but imbalances in the market where the market may want to come back and retest those areas. Okay, so let's mark this out here. Again, we have the change of character below here. Okay, so really nice market shift here on the 15-minute time frame. Again, just to recap, we have the close above that gave us the BOS. That meant that this was our external low. We got the close below, retest through here. Okay, so the short that I put on, guys, is here on the screen now. And again, this right here is what I talked about in Discord. I shared this in real time. This is the exact same entry I put on back here, right? And I shared it again, February 3rd, 9:56 a.m. I'm showing you this, not the flex again, but just to show you that this isn't hindsight stuff. This was a trade that I actually put on. Okay, so looking here, and again, if you want access to Discord, guys, check out the free course. Beyond that link or beyond that page, you are going to have a chance to join Discord if you want. Again, if you don't want to join, that's totally fine. It's completely up to you, obviously. Looking at the 1 hour time frame, though, we have this area down here. Okay, so we have imbalances now, sell side imbalances down here in this region. This entire area down here is a sell side imbalance. So I know this when I'm getting in the trade. And I know that the market is likely going to want to come down here and mitigate all of this. Now, why is my target way down here? Well, if we look back here on the 1 hour time frame, what you'll notice is that, first of all, this back here is also an imbalance. Yes, we saw it mitigate a little bit through here, okay, and a little bit on this low, but you can see the displacement that occurred through here. So I know, looking at this here, that there is a slight imbalance down here in this region. Now, furthermore too, if I go back here, what you'll notice is if I go to a 4 hour time frame, all right, let's go to this time frame here just to kind of clean it up, just so I can fit all this on the chart, is that this right back here also caught my eye. So this back here was also displacement, okay, out of this low. We saw the market go sideways here, okay, and we saw no retrace into this area. We have not been back here in this region. So that is why I was targeting this low right down here. Okay, so again, we had this area down here. Okay, so my targets look like this. First target down here at the lows after filling these imbalances through here. Next target down here, third target down here. Okay, so in this case, guys, we had multiple sell side imbalances to target. And again, this goes back to step number 4 here when you are swing trading. If we're using imbalances to enter the market, then it makes sense to use them to also target areas before we enter the market, okay? So now the third step here in this process is going to be to ensure that your risk reward is asymmetric, okay? And what do I mean by that? What I mean is that your reward has to be greater than your risk, okay? Sure, you can go out there and trade SMC with a 1-to-1 reward to risk, where if you're risking $1,000, your reward is $1,000. But I'm going to tell you right now that the number one way, or the best, easiest way to become more profitable is to start looking for setups where your reward outweighs your risk. Okay, at a minimum, it needs to be, in my opinion, 2R, meaning that your reward is 2 times your risk. But for me, my minimum is going to be 3R, where my reward is 3 times my risk. And really, ideally, typically, I'm looking for those 4X or 5X setups where my reward is 4 or 5 times my risk. So just to update this, our risk reward, okay, has to be, okay, 1, 2, 3 or better. So in other words, again, you see here, right? Risk to reward is 1 to 3 or better, meaning that if you're risking $1,000, your reward has to be $3,000 or better. Okay. So very simple. And in this case here too, with this setup, you can see that if I hover over this, you can see that this was a 7.9 R, meaning that my reward was 7.9 times my risk. Now, here's the thing too, though. Like I said, my targets were areas down here like this. So I was scaling out on the way down. And in this case, I ended up getting out of most of this down here toward this low. So my average exit was down here in this area. So if we drag this up, my reward wasn't technically 7.9 times my risk. It was more like in the 5.5 area, which is completely fine. I mean, a 5.5 R where your reward is 5.5 times your risk is also incredible. So you can see that here. Now, if we go back to the hourly time frame and just play this forward, you can see that we do get the market coming down here to this area. So that was my first target there, and then moving down here toward this area. Okay, and even with my final target down here, you can see where we did actually come down here and test this low fully. Okay, and again, I did announce these exits here in Discord. This was my first one. I booked a third profit here, booked another one through here, sharing the charts here with members as well. So all of this, guys, was documented in real time in Discord. Again, this is not hindsight stuff. I'm actually in the trenches every day trading this stuff. You know, not just some YouTuber out here talking about what you should be doing. I'm actually doing it. Okay, so right here, guys, really nice trade from the S&P 500. Again, just to kind of recap here. Right, all we did was identify the context. So the market was mostly sideways here. We then identified an area of interest. Okay, so an imbalance, which was this area through here, this little pocket. We then watched for a 15-minute change of character. Remember, in this case, I was looking for a 15-minute change of character, not a 5-minute, because I wanted a little bit more conviction behind this entry. And you can see this right here. We had the BOS, protected low, BOS again, protected low, close below, confirm change of character. Okay, so following that right there, what we were checking for was imbalances on the sell side. Okay, so step number 4 is to make sure that we have imbalances to target. And if this is my entry up here, right, what am I looking for on the sell side? I'm looking for imbalances. All of this through here were imbalances. I knew that the market would likely want to come back here and retest this, and it did. Okay, now step number 5 is to make sure that my risk reward is at least 1 to 3, where my reward is 3 times my risk or better. And in this case, it certainly was. So that's it for today's video. I truly hope that it helped you. If it did, then check out this link right here. This is going to be that free strategy where I walk you through exactly how I trade full time. It is completely free. And if you found value in this, then be sure to subscribe to the channel. Until next time, trade well. I will talk to you again tomorrow.